you looking for an FHA loan to purchase a condominium? Well, great news. I'm going to go over that program for you. Hello, I'm John Thomas with Primary Residential Mortgage. Well, if you're pre-approved for an FHA loan and you want to purchase a condominium, the condominium itself must be approved by FHA in order for you to qualify to buy it. So there's some guidelines that the condominium must meet in order to be approved by FHA or HUD. HUD's the organization over top of FHA, and they actually you submit the packet to them. They're going to approve the condominium. So the first big guideline is 50% of the condominiums must be owner occupied. That means people that own them must be living in them. If more than 50% of those condominiums are owned by investors, it is not eligible for FHA financing unless it meets the new guideline that came out October 26, 2016 in the mortgagee letter. We'll talk about that in a minute. There's no longer any spot loan approvals. There used to be a process for the lender to actually spot approve the condominium for approval. That was taken away, so it has to go through the approval process directly with FHA in order for you to approve it. There is a list of FHA approved condos. You can get that list on the website. So on our mortgage website, DelawareMortgageLoans.net, if you click on the condo loans, there is a link for you to check the list of approved FHA condos. Now, the other thing is no person or entity can own more than 10% of the total units. So one investor cannot own more than 10% of the units. So if there's 100 units in the condominium, an investor cannot own more than 10, that one single investor, or it's not eligible. No more than 50% of the condominiums in the development can have current FHA loans on them. So the project must be 100% complete, 100% of the units sold, and 10% reserved in the budget. And the HOA must be controlled by the owners to get an exception to that 50% rule. So again, no more than 50% get FHA loans unless the project's 100% complete, 100% of the units are sold, there's a 10% reserve in the project budget, and the HOA is totally controlled by the owners. Now, the approval process, FHA must review the homeowner association budget and insurance coverage and make sure it's adequate and meets their guidelines. Existing condo projects must be recertified every 2 years. If they don't get recertified, they're no longer approved. So the condominium association must go through a recertification process. Now again, FHA is looking at changing that, but currently as of November 2016, this is the process. Now there is special rules for 203 condo loans. So the condominium, if you're trying to do a 203K loan, the condominium must meet the guidelines, and you have to meet the guidelines for a 203K loan. So you have to meet both of those. No more than 4 units per building. 50% we talked about owner occupied or more, and then funds used for interior only. So the funds you're buying the condo with are only for purchasing the interior unit of the condo. You cannot be using those for any exterior stuff because that's not owned by the owner, that's owned by the condo association. So those are pretty much the guidelines that the condo association must meet for you to get approved for your FHA loan to purchase that condo. The condominium is the one that typically goes through the process of getting approved, and the most common process is called the HRAP process through FHA. Now, FHA mortgagee letter that came out October 26, 2016 came up with an exception to the 50% owner occupied rule. It can be as little as 35% owner occupied and still get the condo approval from FHA if it meets a couple guidelines. First of all, the application submitted by the condo association must be submitted under the HRAP condo approval process. Funding of replacement reserves for capital expenditures and deferred maintenance of at least 20% of the budget in a separate account. No more than 10% of the units can be in arrears for 60 days or more. So that means if you have 100 units, no more than 10 units can be 60 days late or more on their monthly condo fee. And then the condo association must provide 3 years of acceptable financial documents. If they do all that and they meet the guidelines, then the condo will be approved, and it will be approved with down to only 35% owner-occupied condos. So that's a big change for FHA. That may open up a lot of condos right now that got turned down that can reapply and get approved. So pretty much that's the information you need to know when you are trying to use an FHA loan to purchase a condo. If it's already on the approved condo list and the approval is not expired, go ahead and write your offer. If it's not on the approved list or it has expired, you cannot purchase that condominium unless they reapply to get recertified or apply to be certified as a HUD approved condo. If you have any questions, feel free to give us a call, 302-703-0727, or you can go online, www.delawaremortgageloans.net. Look forward to seeing you guys on the next loan update.